Good morning, good afternoon, good evening. It's your boy Gary Scott, aka the Solid Pip Assassin. We're back with another live session. This session is going to be a little bit more intimate. I'm going to be asking everybody that is on a live call with me to point out some things that they want to focus on a little bit more, and I'm going to go over all of those things. All right. So with that being said, let's get straight to it. All right. First things first. The first thing that you kind of want to do when you actually looking at these charts, right, is identify right major high levels and major low levels. Right. When I say major high and major low levels, right? This is one of the things that I feel like is going to actually come back to be able to help everybody that is on the call, basically with what they were asking for, right? So if we look here, right, this is a major high, right? That's a major level there. And then we also have another major level here because price stopped at this point before, right? And then if we look a little bit below that level, right, you have another spot where price had a major push from, right? You want to see areas where price had major pushes from, all right? Because if they have major pushes from, all you have to do that and from that point on is identify which direction the market is actually moving in. All right, you guys see, I only marked up three major levels, only three. Right, I didn't go and find a crap ton of levels, and then I have a crap ton of lines on my charts. Right, no, I find the main three levels based on where price is currently moving at. Right, price is currently moving between this high and this low. Right, and then there's a median in between that level. All right. And because there's a median, you see how every time price gets to these levels, they have reactions. Every time they get to these levels, they have reactions of some sort, right? Cool. All right. That's number one. It's finding the major structure levels for where you are in the market. No matter if you're on a 15-minute time frame, the hour time frame, the 4 hour, or even the daily, right? That's it. You want to find those three major levels. That's number one. All right. That's number one. Number two is finding the trend. So if I'm looking at this chart right now and I got this level marked off, I got this level marked off, right? This level isn't here yet. Let's act like that level isn't there yet, right? But based off of these two levels that we have right now, right? Which way was the market actually moving? It was moving in a what to go into a what, right? What two trends happened in between these two levels? Right? It's a question you got to ask yourself because then we're going to get into actually looking and actually finding where we need to take these trades from to get our entries. All right. So let's see. It was moving in an uptrend to a downtrend. Good job, Sasquatch. It was moving from an uptrend, right? Because it created a low. It created a higher high, higher low, higher high, right? And then price did eventually do what? It broke a structural level, right? It took out a structural high here. Price fell to the downside. And then it ultimately even took out this structural high at higher low at that point, right? So you got two breaks of structure, one here and one here, right? Notice how I put these lines at the bodies of these candles because then, right, and I point this out a lot, right? If I go to my line chart, these are structural higher lows and higher highs in the market, right? Low, higher high, higher low, higher high, higher low. Price then does what? Takes out that higher low, takes out this higher low, creates a new low, and then what does price do? It looks to retest, right? So now if I go back to the candlesticks, we know that this is a natural break of structure. This is a natural break of structure, right? That's how. And then to answer your question, Shay, I believe Shay was the one that asked about how do you able to identify when a trend is getting ready to change, right? It's going to take out higher lows on the market, right? Once it takes out higher lows, it's going to create that new low. And this is where you find your entries from. All right. This is where you find your entries from. Again, our three areas of value, and I'm going to point them out. And these are the only levels we want to actually take trades from, right? Order blocks, right? Fair value gaps, right? And then you have what? Structural levels. It's all going to tie in back to what I teach you guys on a regular basis, right? And I don't want to leave no stone unturned. So these are the only levels you actually want to take your trades from. This is it. If if price is not reacting off of one of these three levels, then you should not be taking a trade, right? But the thing in how you actually supposed to identify What's transpiring is pay attention to the trend. Price broke structure here. Price broke structure here. All right. So when it creates this new low, it's looking to retest back to one of these three levels. All right. Whether it's an order block, a fair value gap, or a structure level. Now, if you're moving in a downtrend, what a bearish order block looks like is one of the last up candles, right? Before price actually broke structure. All right. So one of the last deepest up candles, right? We have one here and then this one also here, right? This is a major level because it's also even playing as a structural point in the market. If you guys pay attention to this, right? This is a major structural level in the market. Price came back to this structural level, right? There's an order block as well as a structural level at this particular point. So from wick, right? From wick to body, what does that happen? Price gives you a structural level here as well as what fair value gaps even being right beneath it. All right. Remember, if I told you guys, if you listened to me before, I told you if there are areas of value that actually are near each other, right, that is a strong level. So if you got a structural point next to a fair value gap, right, a fair value gap is when this candle's wick and this candle's wick does not meet in between the body of this candle. So if they don't touch, in between the body of this candle, then what? That leaves a space within the body of that candle, and price is always going to be attracted to that level, right? So that's two levels right next to each other, a fair value gap and a structural point, right? From wicks to bodies. From wicks to bodies is our structural levels, all right? Not only that, but then you have like, right, your fair value gap right there as well, okay? I'm not sure who that is. Let's see. Somebody Somebody's not muted. If you can mute your mic, please mute your mic for me. Um, if I can't do it, but I don't want any access noise, just so everybody can hear for a second. All right. So what? You got a structural level here, right? Price stopped at this level once before, right? And then it broke through. When price came back to that level, it came right back to this structural point, and there's also a fair value gap level right beneath that. So, how do you catch your entries? You catch your entries off of these areas of value. What are the candlesticks that you're looking for? Right? In a bearish moving market, in a downtrend, you're looking for an evening star. Write this down. You're looking for an evening star. You're looking for a bearish engulfing candlestick. You're looking for a bearish pin bar, right? And you're also looking for other bearish candlestick patterns like a bearish pregnant lady. That's a very small bearish candle next to a big bullish candle, right? And then you also have like something that we like to call the three black crows. So it's like three consecutive bearish candles right after the next. All right. Three bearish candles right after the next. Now, what does an evening star look like? All right. I'm going to give you guys that example of an evening star and I will answer some of your questions. How do you set up the settings to where it automatically change colors from OB to fair value gap to structure level? Oh, right. I'll get to all of that. I'll get to that. So I wanted to make sure I got your question down. I seen everybody typing in there. How am I able to change the colors of that? I will get to that. I'll get to it. Right. So I have it automatically set. I'm very meticulous in how I do things and where I want things to look and how I want it to be put out. But I just change the colors. That's it. I get a rectangle option box right here. This rectangular box. If you click on the arrow here, it's gonna give you a rectangle. And then all I do from that point on is again, I would click on it. I'll click on that box. For example, it's gonna bring up this, and then you go to style, and then you're able to change the color of your box, right? From the border to the background, right? My background is gray, and then you'll be able to change it from there. And then you go to template, and then you'll go to save as. So all of my order blocks are saved, my structure levels are saved, and then my fair value gaps are saved as well. So I have all of those already saved as a template. So that way, if I get to it, I just click on it, and then I click on these, I click on template, and then and I hit one of these and it'll change it automatically for me. All right, that's how I do that. But to go back to where we were, don't want to get off too much. But what I need to see from these levels is candles closing beneath it, right? If you guys see, I got a bearish candle closing below, but did it pass my bullish candle? It didn't, right? But what did I end up getting? I end up getting a bearish candle closing beneath both my structural level and my fair value gap level, right? If you wanted to get an aggressive entry, you could have entered after this candle closed because it respected this structural level. All right. So your entry naturally would come from this candle if you're being aggressive. If you want to be conservative, you will wait for another bearish candle to actually come into play so that way you can enter there. All right. So I would enter here. My SL would actually go above my area of value, which is my structural level, right? And then I'm aiming for at least a 1-to-1, which is because my SL is 30 pips, my take profit needs to be 30 pips. If I want to go for a 1-to-2, what's 30 plus 30? That's 60. That means that gives you a 1-to-2 risk to reward ratio. All right, meaning that it allows you to be um it gives you position to be more profitable than you would actually be if the trade actually went against you. All right. So all I need to see for me, right? For me, all I would need to see is a bearish candle closing below. But to give you guys a bit more confirmation, I will want you guys waiting for those candlestick setups that I gave you. Evening stars, three black crows, pin bars, right? Or any other bearish candlestick confirmation pattern that you would also see when you study these particular candlesticks. But those major three, evening star, right, pin bar, and three black crows, or even a pregnant lady, right? What does a evening star look like? Well, let's go find one for a second, right? Let's find an evening star setup. This is what an evening star would normally look like, right? You see this bullish candle here, a doji candle right in the middle where it has a very little body and wicks on both sides, and then a bearish candle, right? So bullish, doji, bearish. All right. So that's a candle that you would want to see at an area of value. Did it show here? No. All right. But that's one of the candles that you want to pay very close attention to. An evening star. I'll put a box over it. All right. This is a evening star candlestick. All right. Let's change the candle to, let's put that box as orange. That's an evening star candlestick. Everybody got that, right? Cool. Evening star candlestick. What does a pin bar look like? Right? A pin bar looks something similar to this here. All right. It has a strong wick, a big enough body with a small wick at the bottom side of it. Right? Whether this candle appeared white or whether it appeared black, this is still a pin bar candlestick right here. All right. And again, let's mark that up. Right. So, yes, they're not showing at ideal levels that I kind of pointed out here, but these are how these pin bar candles actually look. What does a three black crow look like? A three black crow is, whether they're big bodies or small bodies, it's three consecutive candles right after the next. So this could also be played as a what? The three black crows. All right. But sometimes the bodies of these candles may be a little bit smaller. All right. What does an engulfing candle look like? An engulfing candle, right? From 1 hour 3 levels, this is an engulfing candle right here. All right. You see how this body of this candle surpasses this bullish candle's body. All right. This is an engulfing candle. All right. Boom. Everybody got that? Everybody got that, right? I went over some of the three candles that I want you guys to actually pay attention to. You have your morning star here. You have your engulfing candle here, right? You have your pin bar here. And then you have your three black crows. All right. Again, every pattern or every candlestick is not going to look ideal, but they still have the same exact meaning. All right, everybody following along with that? Cool. If everybody has gotten that, if everything that I've went over thus far as the candlesticks makes sense, type a three in the chat. All right. Type a three in the chat if me explaining those candlesticks made sense. All right, because then now, right? Now, what's going to happen is all you need to see is these particular candlesticks appear at our areas of value. That's it, right? So we got our structural level here, we got our fair value gap level here. All we need to see is now candlesticks actually closing beneath that level for us to take the trade there. All right, cool. So we went over the candlesticks. I showed you guys a structural level. You have one here, right? We have one here from wick to bodies, right? These are our structural points in the market. Do. Let's see. Boom. All right. Drag it across. There go, Bobby. What's going on, my guy?
What's up, bro?
Good with it. Um,
Yes, sir.
then, right, we have our structural level here. What happened to price? Price pulled back to that structural level. And I believe somebody asked about price action. Let me see. I think it was Mr. Clayton. I think Mr. Clayton asked about price action. What does price action look like in the market, right? What does price action look like in the market? It looks something similar to this right here. All right, Mr. Clayton. So we have these particular candlesticks right here. Pow pow, right? You see how this bullish candle actually closed above structure, right? It closed above our structural zone, right? And then ultimately, what did you end up getting? You got a bearish candle actually closing right back beneath the structural level that you have marked up, right? You see that, Mr. Clayton? You can even unmute yourself if you want. You can unmute yourself. Um, I just want to know if you see
Yeah,
that.
I see that. Yes,
So you see how
yes,
price pushed up and then it eventually even closed right back below the area of value that we have.
yes.
That is
Okay.
considered price of that's considered price action. That's true price action at its form, right? If it closes above a certain level and then eventually close right back below, right? That's letting you know that either the buyers are in control or the sellers are in control. That makes
Okay.
sense,
That when you pointed out the
right?
top of the candles there are even, but the wick is high.
The wick is high,
Uh,
right?
but you're going by the full
The
body of the
full
candle.
body, the full body of the
Okay. Okay.
right? We're
Very
looking at
good.
the full bodies of these candles. Yes, it closed above, but we want to see price actually close back below,
Cool.
right?
All right.
And that truly gives you your price action because then if you think about it, right? Let's say you entered this trade, right, Mr. Clayton, and you
Hmm.
seen this bearish candle close right back below. Your
Yeah.
SL would naturally be above these bodies, right?
Yes. All right.
Your SL will be above these bodies, and then it naturally already puts you in a position to have your SL above your structural level, right? Because then at now, all you're doing, right? If you don't have a low to actually aim for, you're aiming for the backside higher low that was actually created, right? Previously, because that's ultimately where you would want to go. You would want to go back below this low, all right? And then if you see when price did pull back, when it broke this structure and it ended up pulling back, where did it come right back to? Naturally, it
The top
came
there.
right back to your
Yeah.
structural level.
Yeah.
You see that? So that's
Yeah.
how you know that that's a significant level. If price pushes from that point and then it comes back and it still plays right next to your entry, right? It plays right next to your entry, and then eventually what ends up happening to price? It takes out that previous lower low that was created, right? You make your money, you go about your
Yeah.
day, okay? And then
That's good.
right? And then now what happens? It gets you your new low, right? You can put them at the wicks or you can put them at the bodies, right? When it creates your new low and you have your breaker structure line here, you can put them at the bodies or you can put it at the wicks. Either or is fine. Sometimes I do like putting them at the bodies because then if price does eventually close below that level, I know that that is a true level of a break of structure. All right, that's a true level of a breaker structure, right? We can type it up in there. It gives you your BOS. Your lowest low is created, right? Your new low is created in the market, right? Naturally, what you would want to put there for me, if I seen that, I would want to put a black line at this particular level because that's my aiming point. Whether it's here or it's here, that's my aiming point. So let's just say this didn't happen yet, right? Once price decides to pull back, you have to figure out where it's pulling back to, right? So that way you're able to take your trades from these significant levels. If we're looking at this candle, right? Yes, it has a bullish body, but it's extremely small, which allows it to be a doji candlestick, right? And doji candlesticks also tie into being what? Order blocks, right? So I gave you guys the structural points, right? And then I gave you guys, right? That's a structural point. Now I'm going to point out the order blocks to you guys, right? When you get breaks of structures, you want to find the deepest last. If you're moving in a downtrend, you want to find the deepest last up candle before price actually broke structure, right? That's where you want to find you actually taking these trades from. So, prime example, right? Prime example, if we're entering off of this candlestick from wick to wick, that gives you what? Your order block, right? That is how you find an order block. A doji candlestick is also an order block. All right. Boom, boom. We see how it taps this order block and then it changed directions, right? It gave you rejection and then it also gave you a bearish candle, right? But what you also could pay attention to, right? Sometimes there are going to be levels like a fair value gap here, right? Sometimes it's going to respect it, sometimes it's going to run through it. In this case, it ran through it to touch a higher order block or a higher area of value, right? You want to find a fair value gap and an order block above the structural level that it actually broke, right? When you're in a downtrend. So this could have also been a very key level. All right. From this candle's wick to that bullish candle's wick gives us our fair value gap level, right? If we pay attention to here, let's just say this is irrelevant to the right side for a second. All right. From this candle's wick to this candle's wick, if there's a space within the body of this candle and these wicks don't meet, right? If these wicks don't meet, what's happening? Right? That gives you your fair value gap level. That gives a space in the market where price has to come back and fill that level to give you some type of rejection from that point. All right. That's how a fair value gap looks in a downtrend. All right, everybody following along with that. I'm sure I think everything that I went over just as of right now, Colin just basically answers everybody questions based on what they were asking for. If it answered your question and you don't have any more, if it answered your question, what I want you to do is type a 3 in the chat. Would you be looking for entries both at both areas? You could, right? You could. You most definitely could look for entries at those levels. But you see how price ran back above that point, right? That means that that area wasn't valid enough. And if it does that, right? And then if you even think about it, you never even got a confirmation candle from this fair value gap, which shows you that it's not significant, right? We didn't get a bearish candle closing below, right? We eventually even got price closing above that fair value gap. So we know that that area isn't significant. Unless you're getting a significant confirmation candlestick from these levels, then that's how you know you need to be taking the trades from that particular point. Because then at that point, all you're doing is placing your SL above this point, right? And then you're having your take profit towards the low, right? That's really it. Let me see. I know we got some. All right, we got threes, right? No rejection, no confirmation. We're not taking a trade. No rejection, no confirmation candlestick. We're not taking a trade from that level because that level didn't hold up, right? So boom, you got your rejection, you got your bearish closing below this level, right? Where would I take my entry from this level? Boom, right there at this candle's close, right? And mind you, the same way that I'm teaching you guys this on a 4 hour time frame, it's the same exact thing. You just have to follow the trend, right? It's the same exact thing I'm teaching you. Time frame doesn't matter. The time frame just helps that style of trader. All right. If you're a swing trader, the higher time frames is better for you. If you're a scalper, 15-minute, hour, 30-minute, those are the time frames that are for you, right? If you're a person that likes things moving at fast pace and you like quickly hit and take profit, then you're a scalper. If you don't mind having a trade run and you actually um just being patient and letting the trade actually play out for a long period of time, whether that's a couple of hours, whether that's a day, whether that's a couple weeks or a week, and you don't mind sitting through a trade, you're patient enough to sit through a trade, then you're a swing trader, right? And then you have those intraday traders that don't mind sitting in a trade for about an hour, 2 hours, maybe even three, but they're not going to sit into it the whole day, right? Hope everybody understands that, right? Those are the three types of traders, and that's something that you're going to have to be truthful with yourself about to understand the type of trader that you are, right? Because then it even ties into the pairs that you trade, right? The pairs that you trade plays a factor in that as well, because you have some pairs that move slower. If you want to work on your patience, right? Pairs that end in NZD are started NZD, or pairs that end in CAD are starting CAD. Those are the ones that move slowly, but they move swiftly, so that way you'll be able to capitalize. All right. Reject or engulfing, right? If that's the one that you want to look for, if you want to look for a rejection plus engulfing, cool, right? There's nothing wrong with that, right? You have to find out a candle pattern that works for you. I know for me, the candle patterns that work for me are bearish candles closing beneath my level, right? Because I have an understanding of what that bearish candle is meaning, right? Sometimes you have people that solely want to go off of the candlestick pattern that they like to see the most, and that's perfectly fine. There's nothing wrong with that, right? It's absolutely nothing wrong with that. So, boom, we see how we got our major levels marked up. Mr. Clayton, to even give you another example of price action, you see how price pushed above this structural level that we have here? If you're still on a call, I think Mr. Clayton might be.
Yes, I'm here.
All right,
Yeah,
cool. So if you see how this is a structural level in the market for us, right?
yeah,
And we seen how price broke below that point, right?
correct.
Broke below, it pushed back up above, and then eventually what ended up happening?
Draw.
It dropped, and you got to close back beneath that structural level,
Mm,
right? So even if you don't get your entry from up here, right, your SL could have been still above the bodies of these candles,
yeah,
right? Because if it does end up going past this point, it's probably going to continue to buy, right? But
correct.
we get our entries based off of this. It closed back below my structure level, right? And then ultimately, what did it end up doing? It never even really thought about going into the negative, and then eventually it ended up
Yeah,
taking out that low, right? So that's another form of price action as well, right? So I just gave you two examples of two forms of price action that is extremely valid, um, you know, are pretty good price actions because this is naturally how you want to actually get your entries, right?
yeah.
All right.
Thank
So
you.
no, for sure. You got your entries there. Now let's see. I got some other questions. I believe some other everybody wanted to see. Um, don't have patience to hold a long trade, but I've come to realize that the higher time frames is clearer to trade from, and it doesn't seem as clear on the lower time frames. True, right? To me, that's true. Everybody is different. Everybody don't mind trading on the smaller time frames, right? Because I can even go back, guys, right, for a second. I can even go back and look at the 15-minute, right? In the same method that I'm giving you guys, let's just say for the downtrend that we were in, right? It could be the same thing can even play a factor, even on the smaller time frames. All right. So let's find one here. Doom, 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 doom. All right, here. This is a cool one. All right. So eventually what happened? Yes, price was clearly moving up because it broke structure on this backside, right? Price pushed up again, but then it eventually came back down and broke this level of structure. All right. It broke this level of structure on a smaller time frame. Boom, boom. Right? Price creates this low. And then what does price retest back to? Right? Remember, I told you guys about these doji candlesticks, right? And it's also structural levels at this point. We see how these wicks stopped at this point to fall. These are also structural levels as well, right? Wicks to bodies is a structural level. We see how price reacts off of that, right? Let me go to the right box. We see how price stopped at this structural level, right? And then price fell. But then if we don't even want to go off of that and we simply just want to go off of the order block, right? This doji candlestick on this left side of this trade is valid. We see how it wicked. It just tapped. We got that strong rejection and then a bearish engulfing candlestick. You could have entered this market here, right? SLs would have been could have been I would say possibly at the middle level of this order block, right? Because then if you entered here, you would have a deeper I mean a deeper SL, but your take profit will still be low, right? So it'll still kind of play out well for you, right? You catch your entry. Mind you, you're at the smaller time frames, so your SL gets a little bit smaller, right? You see how it was at just at 75, 50 pips. Now because you're on a smaller time frame, your SL gets a little bit tighter, right? 25 pips meaning that you really just need to go for a 25 pip take profit. You got your 1-to-1. We see how the trade actually moves. It goes into negative. Sometimes that happens. Going into the negative is not all the times bad. Sometimes price has to work in between these levels for you to take the trade and it actually turn in your direction. That's the part of actually just being patient. People will see this and they'll be like, oh man, it's going against me. I need to get out of this trade extremely fast. I don't want to lose, da 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 da. But you're kind of playing yourself, right? And we don't want to play ourselves. So for me, right, going into drawdown is not a bad thing. It's not a bad thing. To me, it's not a bad thing. Other traders, it might be a bad thing going into drawdown. For me, I can care less, right? Because I know I'm getting myself some room to breathe. If it does happen to want to do something that it wants to do here, before it even turns into my direction. But you guys see it's the same thing. It's just a smaller time frame. I'm still reading it the same exact way. Nothing changes truly but the time frame, right? So what do you get? You got your break of your BOS, which is your break of structure. Again, if you want to put it at the wicks, you can. If you want to put it at the bodies, you can. You get your break of structure here, right? Price works lower. It ends up going to the downside. You get your new lower low. And then ultimately, what ends up happening? Price pulls back. The question that you have to ask yourself is, what does it actually pull back to? Well, Gary, what does a fair value gap look like? Again, I pointed it out. Fair value gap, again, this candle's wick does not touch this candle's wick in the body of that candle. So you have a middle candle that has wicks not touching on either side, meaning that gives you your fair value gap. And that's the reason why price came to this level and actually stopped here. You catch your entry, SLs will go above, and then your take profit. What are you doing? You're aiming towards these lows. All right, you're aiming towards these lows. If that has made sense thus far, right? If everything that I've been explaining to you thus far has been has made sense, type of PO3 in the chat. If it is making sense, type of PO3 in the chat if it's making sense. All right, Seth is good. Mr. Clayton is good. Um, Dre is good. Okay, cool. Ro is good. Everybody's understanding it. So, right, and ultimately what it does is um Gary, why is the BOS there and not on the left side low? What makes a breaker structure valid? So again, all right, to answer your question, Shay, there's okay, so you have wicks, and that's fine. You can have your breaker structure for that, right? That just gives you a little bit more confirmation. There's two ways to have it, and I'm gonna explain it again because I explained it at the very beginning. You might have missed it, and it's okay, right? These bodies play as structural levels, right? If we go to the line chart and we place our BOS at the very tip of this um line chart, that is a major level of structure. So even if we go back and we look at the candlesticks, this gives you the ultimate break of structure. So you have people that wait for candlesticks to actually break the bottom wick, and that's totally fine. There's nothing wrong with that. That is still considered a break of structure. But what also is considered a break of structure is if price actually goes below the bodies of these candles that are at these lows. Okay, that also lines up as a break of structure as well. All right. Hopefully that answered your question. Oh, I went over that too. I went over that too. You probably missed it. Let me go back to the 4 hour time frame. Um, I went over that though. But what determines that a trend is getting ready to change? You see how price was moving in an uptrend here. It broke these structural highs, created a new high, pulled back, created a new high, right? And then what did price end up doing? It took out a structural higher low. If it takes out a higher low, that is letting you know that it gives you your change of character. So if I delete that box for a second, this is your change of character. That's your change of character. If it breaks below a higher low, right? We see how we were moving in a short-term uptrend. If price takes out a higher low, that gives you your change of character. That ultimately is letting you know that, okay, now when price decides to retest, we have to find an area of value on the backside of this change of character, just as you would do for the break of structure. All right. Low is created, price retest back to a structural level. We get rejections off of that level. We get bearish candlesticks closing below that level. And all we're doing is aiming towards this low. Right? Did that answer your question, Shay? It's the same thing. Nothing changes. Even if you do it on a 15-minute time frame, it's the same thing. Don't overthink it. You're overthinking it. It's the same thing. Just the way you would look at it on the 4 hour is the exact same way that you can look at it on the 15-minute. Right? It's the exact same way. How do you know a change of character is in play? All right, let me show you. All right, we can go to another example. What trend is happening right here, right now? What trend is taking place? What trend is taking place right here? An uptrend, right? Low, higher low, right? No. If I mark, look, let me put it like this. If I'm marking my charts up, because I don't want you guys getting confused. This is why I say follow the trend for that time frame. Follow the same method that I'm showing you, even if I'm showing you on the 4 hour, it still applies. You just have to follow the trend on that time frame. Even if I go back and I do it on a 15-minute, I know it's going up. This is an uptrend. This is a small term uptrend, a small term uptrend. Low, higher low, high, new high, right? And if price ends up taking out this higher low, this gives you your break of structure. All right, your change of character, right? My bad. Change of character, right? What ends up happening? It creates a new low. And where does price pull back to? Right? Near a structural level. All right. But there's also not only is this a structural level here from wick to bodies, right? That gives us our structural level. But there's also a fair value gap right here, right? We see how this wick and this wick does not meet. If they don't meet, if they're not equivalent to each other, if they're not equal to each other, that is a fair value gap level. Fair value gap from wick to wick, boom, right? We mark it off as such. I tell you guys all the time, it does not matter the time frame that you're on. You have to follow the trend within that time frame and take these trades from these particular levels. So if you got this rejection, right? This is a strong rejection. This is a pin bar. This is a strong pin bar. You see how strong this rejection is and how small the body is? That's a pin bar. It doesn't matter if this candle was black or white. That is a pin bar candlestick. Okay? You could have caught your entry the moment that this candle closed off the 15-minute time frame. Your SLs would have been above this wick, and then you would have been aiming towards these lows. Okay? Is there any way you could place this SL without viewing those fair value gaps and structure levels? Okay, good. I'm glad that clicked. All right. My bad, Sasquatch. Let me go back to your question. I don't. Is there any way you could place the SL without viewing those fair value gaps, SRTs? Why would you want to do that? That's totally going against how it's setting yourself up to actually take these trades, right? But one way that you can actually place your SLs without using these areas of values is paying attention to these wicks. That's my bad. Uh, right? It's paying attention to these wicks, right? If okay, for example, if you took this trade, I actually even just explained it on the low for real, right? Let's say price changed characters here and it created this new low and price pulled back and you got this bearish candlestick here. And let's say you entered off of the bearish candlestick, right? Let's say you entered off of the bearish candlestick. Your SL would be where? Above your wick. Because if price happens to go above that wick, it's simply wanting to actually possibly continue to go higher. All right. So if you didn't even want to use the fair value gap or the order block or the structural level, wicks is how you would actually be able to determine where your SLs need to be. All right. And again, right? Boom. You want to go for a 1-to-1 at least, right? A 1-to-1 17 pips. You made your money, you go about your day. That's how you place your SLs, even if you don't use those areas of value. You place them off the wicks, off these lower high areas. All right, because then I can read the market the same way if we were moving into an uptrend, right? They say, okay, cool. We see how price was moving in a downtrend here, right? Low, lower, low, lower, low, right? Then you got price doing what? Breaking structure to the upside, right? This is a lower high. Price broke structure here, created a new high. When it pulled back down, the question you have to ask yourself is where did it stop to, right? We know that potentially it stopped at this order block level, right? If you're having a hard time finding a zone, you might need to go down to the smaller one because there might be one there. But this is still considered an order block, right? Because it's one of the last deepest areas of value that price came back to before it continued to move in its direction, right? Here, price continuously closed above this level, right? This is also price action, Mr. Clayton, if you're still on, right? If you get price coming back to these areas of value and then you have price closing above these areas, bullish, that's also price action as well. Um, boom. Take your entries from these levels, right? You're getting candles closing above 15 pip SL for at least a 15 pip gain, right? Or more, right? Because ultimately we're aiming to the bodies or the highs of these wicks. All right, money's being made. You go about your day. You at least always are going to get a 1-to-1 risk to reward ratio if you're taking these trades properly off of these levels. Okay. So I gave you a bearish example and I gave you a bullish example. Do you guys have any questions as of right now? If you guys have any questions, if not, and everything is making sense, everything is making sense. Type of PO3 in the chat, right? No, it's no guessing. It's no guessing. You're reading the story of the chart. Once you can read the story of the chart, then you're able to identify what's going to happen next, right? Because then, even if I'm looking at this on a 15 minute, I can care less what time frame I'm on. I'm following the method. I can care less. I get my breaker structure, right? I get my new high being created. All I need to do is find an area of value on the backside of the breaker structure, right? On the low end of this breaker structure. Can anybody tell me where price stopped at here? Right? When it stopped at this level, where did it stop at? Based off of what I've explained to you guys and what I went over, where did this price stop at? Where did price stop at here? I'm low key even kind of giving you the answer because I'm pointing at it. But all right, yep, you see a fair value gap there, right? But there's also, right, there's a fair value gap right here, right? But there's also an order block right beneath that. And remember how I told you guys, if there's two areas of value right near each other, that makes that level a little bit more um it gives you a little bit more confluence, as I would like to say, right? Because then you got a fair value gap right above here, right? From wick to wick, boom, right? You got two areas of value here, but remember, It did not respect this fair value gap. It dropped below and came back to this order block, which is the last down candle before price looks to actually head into your direction. And this is why sometimes I like to tell you guys to even take these trades up to the bodies of these candles and not all the time to the wicks, because sometimes price can stop here. You see how it stopped here and then reversed, right? Sometimes it's good to just take it to the bodies, right? Sometimes you can go for the wicks. Sometimes just good to go for the bodies in most cases, right? All right. Everybody understand that. How do you exactly determine from this candlestick I'm going to draw my fair value gap? Um, it gives you it. I mean, I don't know how else to kind of like put that. It actually gives you the fair value gap. We already know these like this is happening, right? And we know that this is a break, this is a high. So the moment that price creates this form of a fair value gap, then you know that it's already there because you already see it after this candle closes. So the moment that this candle closes here, you see this fair value gap that's right beneath it. All right. So it's just more so just kind of like, okay, I know that this is a breaker structure. Price end up breaking this level. While it was even still finishing out this move, it created a fair value gap. So I already know that prices has a great chance to come back to this level and react off of it. But then I also know that below that level, there's another order block here. All right. Hopefully that answered your question there. All right. Okay. Everybody good. Everybody got that. If you have any questions, again, you can type them up in the chat. You can ask them, and then I'll most definitely get to them. Um, if everything has made sense based off of everything that I've explained thus far, because it's just simply about just putting all of these things together and just making it one. Okay, and if you can put everything together and make it one, right? It'll simplify a lot of things for you. Because then also, right, when we get to these major levels in the market, just like I told you guys about these areas of value and price creating these levels in the market. Let me even pull up this indicator for you guys for a second. And this is really kind of the only indicator that I truly use. I don't really like using any other indicator. I'm more so like going off of what price is dictating, because price is king. All right. So you see, naturally, I already were pointing out these levels, right? These levels was naturally already getting pointed out to you guys before I even pulled this up, right? This indicator wasn't even up. I took it away. Like I'm at the point now where I don't even like using this indicator. It's cool and everything, right? It gives me a kind of an example to actually, see where I'm at and how it's actually transpiring and moving. But you guys notice how every time it creates a lower low, it's going to create a lower high, so on, so forth, right? But every time you get to these areas of value, whether it's a structural level, whether it's a order block or a fair value gap level, depending on which trend you're in and in the start of that trend, right? If you're moving in an uptrend, sometimes it's going to create something that we like to call double bottoms, right? Let's say, for example, price is moving and we know that an uptrend is actually getting ready to start. It's going to create a double bottom, right? And it's going to happen at one of these areas, whether it's an order block, fair value gap, or a structural level. A new trend is going to start based off of this double bottom. Then you also have a triple bottom. But here's the thing that I'm finna point out to you guys that's gonna help you out, because a lot of people get mixed up with this, right? They expect double bottoms to be perfect all the time, and it's not gonna be perfect all the time. Sometimes you're gonna have a double bottom that looks like this. Sometimes you're gonna have a double bottom that looks like that. Sometimes you're gonna have a double bottom that looks something like this, right? It's a double bottom though. It's not always gonna look pretty, right? But you see the double pattern formation be created. And the triple bottom, of course, the triple bottom is going to be very consistent with these three lows, right? And then you also even have what? Head and shoulders pattern. Boom, 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 right? This is your inverted head and shoulders. These three patterns start uptrends are their continuations within uptrends. All right. And then on the backside of this, right, you have downtrend patterns where it gives you double tops, right? Oh, sorry. It gives you double tops. Boom, 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 boom. Right? Are they going to be pretty every time? No. Are they going to look um like this every time? No, they're going to look a bit off sometimes. But you're still going to be able to identify it. You got a double top. What do you have? A triple top. And these are all patterns to let you know price is either changing the trend or continuing in one. All right. Double bottom. I mean double top, triple top, and then you have your what? Your last one is the if this was an inverted head and shoulders, what's the last one called? Right? What's the last one called? If this was an inverted head and shoulders, what do you think this one is? Right? Which one do we have here? If this was an inverted head and shoulders, what is this one? Right? There we go. Head and shoulders. It's a head and shoulders. Head and shoulders pattern. All right. Boom, boom, boom. All right. When you think about your head and your shoulders, right, they're up and your feet are where? Down, meaning that price is looking ahead down. If you put your back on the wall and your head is balancing on the floor, your shoulders are up still, but where are your feet? Your feet are in the air. All right. Which means that price is more than likely going to head in that direction. Right. So, boom. We delete those. Hope you guys wrote those down because that's the things that start uptrends and start downtrends. These are the patterns, right? And then at that point, look at this, guys. It's literally right here. Is it pretty? Absolutely not. It's not pretty. This is a high, right? Created a structural point at this particular level, right? And then it created a double top. Ultimately, that's what that is. This is a double top pattern, right? Double top, price falls, right? Again, you got another double top in a way, right? Right here. What happens to price? It falls. Are they going to look pretty? No, they're not going to always look ideal. And that's something that I want you guys to understand. They're not always going to look ideal. That's your double top. You guys see that, right? Boom, boom. That's a double top all day long, right? Came back to this structural level, price fell from that point. All right, that's the neckline and that's the low that it created. It's the exact same as I just drew out, right? The exact same. Boom, boom, boom. Right? That's the exact same thing. All right. And what happened after that? Price fell. What happened after that? Price pulled back. What happened after that? It reached the area of value, obviously in the market. And what happened? Price fell again. All right. Do you guys have any questions what so far? What mean what so far? Whatsoever. If you guys don't have any questions, if you have a question, type of one. If you don't have a question, type of PL3. All right. Oh, for sure, my man. You have a good one, Mr. Clayton. You have a good one. All right. Everybody's good, right? Nobody has any questions. Um, I feel like this is GU. Price did pull back, which I actually would have wanted it to do. Um, Price is pulling back right now. So I know going into probably next week, we'll probably be looking at GU for a sell. All right. So I just want to give you guys the heads up on that. We'll probably be looking at GU for a sell going into next week. Just based off of what what I have here and what I'm seeing. Let me go back because this was my original setup right here. There's an order block here, right? Overall, overall, GU is moving in a downtrend. Overall, like we look at it from a bigger picture, it was moving in a downtrend. It reached a order block. Yes, the uptrend is actually in play right now. The uptrend is actually in play, right? But what I want you guys to understand is kind of like where price is now. If price ends up breaking this structural level here, this order block, then price is going to continue to go higher, right? But because I got this structural level broken right here, that's kind of keeping me from looking for the buy as of right now, right? Does not mean that it can't happen, right? But this is a structural level in the market that price is actually respecting at its current moment. So in it, and if you was to go to the 1 hour time frame, I guarantee you, right? Look, these structural levels got broken, right? Higher lows got taken out, lower lows are taken out, boom, right? So we go back to the 4 hour time frame, we see how price is reacting off of these levels. And then ultimately what we will be doing is aiming for these higher lows on the backside of this trade, right? So what we want to see is rejection and a bearish candle actually close below this level for us to actually take this trade lower. If it does not give that to us, then we know that there's also an order block here, right? This entire buy candle. If price ends up breaking past that level, then yeah, we know that there's a great chance price is going to continue to buy. But if it respects either this level or this level, then we know that we are looking ahead to the downside. All right. I don't want to give you guys a forceful trade. The trades are going to start picking up again. Me, dropping multiple trades in the chat. I know I at least like to give you guys at least between 1 to 3 trades throughout the week. I don't want to like overdo it. You guys notice that these trades that we've been taking have been crashing. They've been hitting all our TPs for the most part, right? Very minimal SLs that we do take. But for the most part, we're putting ourselves in position to win. If you guys don't have any questions, if you want me to actually look at something and mark up something for you, um, yes, you can even go on the line chart for sure, yeah, and draw these double tops and stuff like that. If you go to the line charts, these line charts will actually show you these patterns that are actually being created in the market from a more simplistic level, right? You see right here, you have a triple top being at the same level, price stopped at this level 3 times, right? And that gave us our triple top, and what happened to price? Price fell. Um, Boom. Right? You see a triple top at this level. Price made a move from that point and dropped down. All right. Let's see. Hey, bro, I don't want to. All right, I'm gonna get back to your question, Shay. I might have to spend a little bit more time with you. Um, I might have to spend a little bit more time with you. Like, I gotta explain with Sasquatch too, so it's okay. I'll get to that. I'll make sure I get you to that point to where you understand it. Don't try to rush the process too, guys. Right? Don't try to rush the process of trying to understand it all at one time. Although it can be very simple, right? The most simplest things can be the hardest things, right? Because it's right in your face and it's extremely simple, but we make it hard. We make it extremely hard. And it's not even just you, Shay. It's sometimes it used to be me. I used to make things harder than what it actually has to be, right? And the most simplest things are the easiest things, right? You just can't try to force feed it or force put it into play before you would understand. Everybody understands it at their own time, right? Kaden might understand a little bit quicker than Shay may understand it, and Shay might understand it quicker than what Sashwash may understand it, or Mr. Clayton. He could understand a little bit more better than um let's just say B. I'm not sure if B is on the call, but or Andre, right? Everybody learns at a different pace. Doesn't mean that you're not understanding it. Your process of getting to that point to where it becomes like that light bulb going off might be different, right? So forcing it, it's all gonna come to. It's all gonna come to. The more time you spend on it, the more sense it's gonna make, right? You gotta spend time. You gotta spend time. You gotta spend time. Let me remove this off of here. Like I said, I don't really like using that for the most part. Because I've gotten to the point to where I can see it without those indicators being there. And that's really, I don't even consider that even truly being an indicator for real, right? You got people that use structure line indicators, they use order block indicators. I don't use those things, and it's no slant. That's just me. Um, I find that it'll bring up too many order blocks at one time. Prime example. Let me show you. Watch this. It's gonna bring a crap ton of order blocks that I don't need. You see how all these order blocks are right here? I don't need all of them. All of them are. It's no point in me looking at all of this, right? You got order block here, 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 order block here. What's the point of me having all of those order blocks? It's zero reasoning, right? But this same order block that I even pointed out to you guys without even this indicator being here is right here, right? That lets you know that yes, this is a significant one. Why is it significant? Because it actually plays right near an order block already. And guys, look, order block here, right? It's the same order block. It's pointing out certain order blocks in the same level that I already have order blocks at, right? And the ones that I even pointed out to you guys. So it's nothing for me. You see how it brings up all of that mess? I don't like looking at it. I already know where I can take these trades from. I already know what these areas of values and these order blocks look like. And that's what I want to teach you guys, not being codependent, not being codependent on signals, not being codependent on indicators, right? You got people that use moving averages. There's absolutely nothing wrong with moving averages. Moving averages can show you the trend of the trend that you're currently in. That's the benefit of moving averages. Um, but yeah, that's the benefit. I like moving averages. Um, Outside of moving averages, then it's the other indicator that I did show you guys, and it's this one. But even then, I wouldn't even consider that being an indicator. But that's either here or there. All right. So if nobody has any other questions, we're about an hour and 15 minutes over. All right. We did a hundred. We did we did we went over an hour 15, which is cool. It's no problem. I like making sure that everybody understands it. If everybody is good, for everybody that is still on the call, either type of three or PO3 in the chat, and we will end the session. All right. If you guys again have any questions, if you want me to look at a particular pair, I know somebody said gold, so let me go to gold for a second before we actually hop off. All right, where gold is right now, it's moving currently in a 1 hour uptrend. I mean, 1 hour downtrend at the current moment, right? This is the current downtrend right now. It is breaking higher low points on a 4 hour time frame, right? So right now it's moving in a downtrend. So what I would want to see, right, is price pull back up towards this level, right? Come back up towards this level or even somewhere around this level to continue this trend to the downside. Because as of right now, all USD pairs are setting themselves up to actually move in a downtrend, whether at short term, long term, it's moving in a downtrend at its current mark because it's changing its trend. All right. So as of right now, of course, yes, price dropped. We did capitalize off of a sell this week in gold. But yeah, price is breaking structure to the downside. So we want to wait for our retest phase for us to take the trade lower. All right. So it'll look something like this. What I would want to see, because this is at a structural level and this is an order block as well. What I would want to see is actually something like this. I think Jason asked about this, if I'm not mistaken. But we'll want to see something along these parts, right? Price come here, price pull back, price will go lower, right? This one area price can react off of. This is another area price can react off of, right? We just kind of see how price plays out. So, hopefully that answered everybody's questions. Hopefully everybody is good for the most part. Um, Right. Again, Sasquatch. That's in that time frame. That's in that time frame. If you want to stick to the 5 minute, if you want to stick to the lower time frames, by all means, go with your move. That's completely fine. What I'm teaching you works on every time frame. It does not matter what time frame you get on. I want everybody to understand that. You just simply have to follow the method. If you follow the method, I can care less what time frame you get on. I can care less. I absolutely can care less. But the higher time frames will tell you what's really going on. That's what I wanted to get you guys to understand. What's really happening is the on the higher time frames. So when y'all bring up the 15 minute, the 30, it don't matter what time frame you bring up. It does not matter. Just follow the playbook. Follow the play. If you follow the play, you good. Right? If you feel comfortable, right? If my method is a little bit too much for you and you feel comfortable with Bobby's, that's okay. There's nothing wrong with that. There's nothing wrong with that. Figure out what works best for you. You can still get on with me. You can still get on with Bobby. Does not matter. Find something that's simplistic and simple for you. It doesn't matter what educator it is. It can be me, it can be Bobby, it can be one of these other educators out in the world. It does not matter. You have to find something that resonates with you that is simplistic to your understanding. Okay? I believe my method is simplistic, right? I truly believe that. I know that it works, right? You guys have came back to me and told me it works. You just got to put it in play, right? You just got to put it in play. All right. All right. Again, it's a 15-minute time frame on gold, right? What's happening on gold right now? I don't want to confuse you guys, right? That's not what I want to do, but that'll be the end of the session. You guys can stay on though. But that'll be the end of the session. I'm gonna stop the recording here and then I'll be able to, get back to you guys with the questions that you do have. All right.